of what international finance is. International, many nations. So when I hear of this international finance, I always imagine, for example, Kenya getting finance from USA. There must be at least 2 nations involved. There must be at least 2 nations involved. And if you've got many nations being involved, then the tagline here really will be, this concept of exchange rates. Risks coming because of what here? Exchange rate fluctuating every day. Fluctuating every day. Now, before, ladies and gentlemen, I really even introduce this topic to you, I would want to hear from you. Is there anybody who could be knowing what FDI is? Foreign direct investments. Is there anybody who has ever heard of FDI? It came just this semester. FDI, and many students were not able to answer anything really. And there are accountants who are reading newspapers every day. Newspapers every day. Is there anybody who knows? Sally, please, are you able to describe for me without Googling? Not Google there. Or rather, even if you Google, I mean, it's part of learning. You are better off than somebody who is gazing and maybe talking to their partners in the house when I'm teaching. It's a disadvantage of what here of online, but I know you guys are mature, you know how to balance. When Mzee comes near you, there you tell him, no, now this is classwork, even Mwalimu is seeing you. Great, 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 great. We are ready for Tuesday, okay? We shall overcome. We shall overcome. Great. So FDI, foreign direct investments. Foreign direct investments. Like you will see, if you normally read Business Daily, Safaricom saying that in this particular year, our foreign direct investors grew by 10%. Grew by 10%. I can see Kamutu saying here, FDI, foreign investors, come into the country and investment in sectors such as manufacturing. Thank you very much, Langa. A foreign direct investment refers to a purchase of a particular organization's interest by another foreign organizations. Thank you very much. I can see from Benjamin Wosire talking about cross-border investment, cross-border investment. So for example, if we have some investors coming from Uganda to invest in a Kenyan company, will that be called a foreign direct investment? Will that be called a foreign direct investment? From Uganda here, somebody come. It doesn't have to be by their own organization. It is either organizations or individuals, basically investors coming from a foreign country to come and invest locally here. That fund, that investment will be called FDI. And it is an objective of any right-thinking government to always encourage foreign direct investments. Look at, for example, what is happening in countries like Dubai. Dubai, they will do anything to ensure that their FDI is growing every year by at least 20%. So they will even have like tax holidays, that if you come and invest here, and then we have dividends, if you're charging dividends, for example, withholding tax on the locals, say 15%, any foreign investor will get his dividend 100%, will not tax you at all. And go and tell all investors outside there that when they come and invest in Kenya here, any earnings, any dividend that comes as a result of their foreign investments here shall not be taxed. Or if they are taxed, for example, as you are taxing the locals 15%, the foreigners, we shall only withhold just 5% like that. FDI is an ownership stake in a foreign company or what here, or a project. I like what I'm seeing, ladies and gentlemen. Many companies, like not companies, but countries. Let me ask you another question before I continue with my discussion. Have you guys ever heard of tax havens? Tax havens like this. Is there anybody who has ever heard of tax havens? Tax havens? If you've ever heard of them, like heaven, right? Basically, these are those countries, ladies and gentlemen, in this case, that would want to encourage investors to go and invest with them, right? They have almost zero corporation taxes, right? And they always operate in a lot of secrecy, right? Which is quite bad to the international community because they encourage what we call money laundering. Money laundering. To launder money is to wash money, to make it clean, right? So is there somebody who knows any, like Mauritius are like that? Panama, Cayman Islands, yes. And you see, in these tax havens, if you happen to be a Kenyan, for example, who doesn't have an account in any of these tax havens, or you have not opened a company in one of these tax havens, then you're not doing well in life. Right? There must be a problem somewhere. There must be must you go to these tax havens here to open an account with them? No, no. Serious companies. Look at, for example, Barclays Bank of Kenya. ABSA. These guys here, they have like a management office in Panama. PwCs, all these big institutions that you see around here, they have management offices in the tax havens, basically for purposes of shifting profits. They shift their profits here to tax havens, such that through transfer pricing, you shall be seeing transfer pricing in this topic here. Through transfer pricing, if, for example, we have a RCM online college here, this is Kenya. I would want to have, in this case here, another department. It could be a branch. It could be a branch of RCM, for example, in Cayman Islands. And they say that this Cayman Islands branch is basically the one managing this one. So that at the end of the year, these guys will be sending in an invoice to the local branch. They'll send in an invoice to the local branch, and for example, say that for the service that we offered in the year, we are charging you guys how much? 20 million Kenya shillings. So you see, it's an invoice. So we shall be able to do what here? To pay, to honor the invoice. When you honor the invoice, what happens to our Kenyan branch here? The profit, because it's an expense to us, goes down. So the profit goes down, it means we pay less in terms of taxes. When this money comes here, the owners now will go to these particular islands here, especially on Tuesday, like now during Valentine's. They can go there now, enjoy their money as much as they wish, because all this money here, in most cases, will not be taxed. So now the question will arise out of you serious students who are thinking of international finance. How do these countries here benefit? These countries like the tax havens. Bermuda, yes, is a tax haven, yes. How do those countries in this case here benefit? They basically attract international investors to come and set up what here? Companies, to come and set up businesses. And once businesses have been set in those countries, then automatically rate of unemployment will do what you will reduce. Right? Now we have most of those companies being able to absorb the local people, and they're very strict. They rarely give even permits, work permits here to internationals, right? They would want now to, in terms of employment, it is their people. You as an investor, you can come in, but they limit you. Like now they have discovered like China will take investments there, but they would want to bring all prisoners from China to go and work in, for example, Cuba. They don't want that. So they'll tell you, you come, you'll enjoy a lot of tax holidays, you not pay tax, but don't come with your people, because you have people here to be employed like that. Now, then those countries, apart from now this employment, now there is also another catch one. These tax havens, in terms of, for example, their pay is normally very high. You guys say that we are overtaxed in Kenya here. No, just go outside there, you realize. You will see people paying pay up to 50% of their gross salary. 50% goes like that. So then at the end of the day, the happiness index in the country does what? Increases. So whenever we talk about, ladies and gentlemen, international finance, always reason like that, there'll be movement of money. There'll be movements of what you trade. And that is why they want us in the course outline to discuss the World Trade Organization. World Trade Organization. Because of these financing systems in between, also in your syllabus, movement of money between nations, they would want us to discuss something to do with World Bank. We have International Monetary Finance, IMF. Now, ladies and gentlemen, in this international finance, you will see them really wanting us to discuss something to do with arbitrage. Arbitrage. So we have arbitrage. I told you the other day, I don't know whether it was this group, but I told some group. Arbitrage means what here? Earning riskless profits by exploiting price differentials between two or many markets. If, for example, today I can go to Meru and buy 1 kilogram of Mera, I'm told these things are very expensive, but I doubt whether they are sweet. I don't know. I don't want to try them. They're bad. So 1 kilogram of Mera, for example, I don't know, maybe at 20,000, it can't be 20,000. But if I know that I can buy from a market in Meru a kg of Mera at 20,000, and then I run very fast, maybe within an hour, to another town, and sell, in this case here, these 1 kg of Mera at how much here? At, for example, 40,000, then I would have earned what we call an arbitrage profit. There is no risk. And at times, in these cases, and gentlemen, even these 20,000, you don't pay it up front. You simply tell jamaa wako, nipatie Mera nikimbie nayo, nitakuletea pesa baadaye. So you are taking advantage of a difference in prices between two different markets to be able to earn a profit, a risk-free profit like that. So this is the most enjoyable topic, ladies and gentlemen. Unfortunately, many students don't perform very well in it, but you guys will like the topic. Great. So the topic, ladies and gentlemen, here is called International Finance, and I would want to share this handout. When you guys don't get handouts, talk to David, don't talk to me. David, we should give you all handouts from today. David, we should give you all the handouts from today. Great. It's taking some time to open. Yep, it's coming. So it's topic number 7, international finance. International finance. And I would want to read it very slowly, and ensure that all of us are comfortable with this topic. So it is topic number 7, international finance. 7.1 is about introduction, the nature of international finance, motives for investing in foreign markets, and the challenges experienced by multinational corporations. Now we want to look at the overview first. By the way, are you able to see my screen? Let me check here. Enlarge the font. Wait, do that. I'll tell you first. Thank you very much for that video. How is this? I don't believe this is much better. Because that kind of feedback is very good, because basically you are speaking on behalf of our future generations that will be watching these videos, especially when I become too old. Great. Better. Thank you very much. Great. Now, international finance refers to the financial activities that take place across national borders, including the movement of funds between countries, the management of international investments, and the provision of financial services to clients globally. It involves the management of money, banking, and financial instruments, and then encompasses issues such as exchange rates, foreign investment, and the balance of payments. Ladies and gentlemen, please talk to me, look at me straight in my eyes and tell me, is there somebody who knows what balance of payments is? Balance of payments. Is there anybody who knows what balance of payments is? Balance of payments. Balance, BOP, balance of payments. Thank you very much. It's exports. Exports minus imports. Exports minus imports. It is exports minus imports. Thank you very much. So of course, then you're able to understand that really balance of payments is well seated within international finance. So in this case, ladies and gentlemen, we have here balance of payments. It is exports minus what here? Minus imports. Minus imports. So assuming, for example, you know, these African countries were quite useless countries. We're basically being guided by and led by this concept of colonialism. Colonialism is well still within us. It is there. We're being led by these guys who don't wish us well. So you will be surprised that, for example, when our exports are, say, like 10 trillion, talk of trillion, I know they are up there, right? Our imports will be like what year? 30 trillion. There is not a single year from the 70s that we have ever had our balance of payments as a country being positive. We are always on the negative side. Now, what are the repercussions of having a negative balance of payments? When you have a negative balance of payments, meaning that you are importing more than you are exporting, you will have so many problems. The first problem will be, in this case, of course, the concept of what here? Instability. Instability of what here? Your country's exchange rates here. Exchange rates. Instability. Because right now, remember, for you to be able to import, bringing in vehicles, bringing in clothes like that, you need the dollar. So if the imports are more than the exports, you will have a lot of pressure for the dollar. So the dollar becomes what are very expensive. And that is why you realize, ladies and gentlemen, like outside there, go to countries like Rwanda, Jerome will tell you, like Rwanda, right? Because they really want to make the economy work. These guys are big in terms of telling their locals, buy Kenya, support Kenya, right? 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 If you want to develop your own country, ensure that you are importing less and less. This reminds me the other day that there are some two young men who discovered some kind of motor vehicles in Kirinyaga. They were very ugly. Kirinyaga here, very ugly. But you see, as Kenyans, especially the Kenyans on Twitter, they should have really been easy to these two young men, even if they have produced something as ugly as a frog. You know, it's innovation. If we were, ladies and gentlemen, having serious governments, those guys here should have even been financed. Because if you look at, for example, importation of motor vehicles, and of course, the importation of these bitumen or whatever, those are the things that are killing us. If you could have our homegrown solution, then automatically our imports will do what here? Go down, homegrown solution in terms of what here? Making our own cars. I even wonder where the Nyayo car, you know, Nyayo was a bright man. You know, Nyayo started with Nyayo car. But again, they made him, I think, something that made him to be very angry. And they stopped the entire project. But how I wish he continued. Nevertheless, it's not lost. Even right now, we should start putting quite serious taxes for these importers and tell these importers that if you want us to buy your vehicles, come and assemble your vehicles here in Kenya. When you assemble your vehicles here in Kenya, then there is a big tax holiday, right? Don't pay taxes for a number of years, right? When they bring this, and gentlemen, please listen, and I would want you to listen because I know most of you are leaders. Here, I know I'm teaching leaders. Yeah, most of you are in this government, I know, you can advise. If there is anything nice that we can do today, is to ensure that our foreign direct investment, ladies and gentlemen, does what in Crete? We bring business here. We bring the dollars here. And how do we do this? To ensure that we are doing what here? Exporting more. And that is why when you hear of a government now introducing what we call export services, it's because they're not looking at the bigger picture. Export services VAT, why? that somebody has worked very hard to, ladies and gentlemen, export some service outside there. You are making this service expensive outside there. We need to be cheaper so that we can get most of the businesses coming to Kenya. Right now, we are losing business to, for example, India. Like this business call centers, right? So we want to make these international people to feel that this is a place, because whether you like it or not, if there is anything that is destroying Kenyans, it is this thing called unemployment. I normally talk to so many people. People don't have jobs outside here. Trust you me. Unemployment is a killer. And that is why you will get, for example, somebody who has got a master's in electric engineering. This person, in this case, of course, has stomached for the last 6 years, right? So the humanity in him, at times, you get like it has already left him. So what he will do, he'll go and do a few things here and there in a transformer, and he's able to siphon that mercury, the coolant in a transformer is called mercury. So he's able to get that mercury, and then they put it in some good bottle, a Fanta bottle. They take this bottle here to where? To a hotel. A restaurant, can't be a hotel doing that, restaurant. So of course, this coolant, when it is doing this thing in the kitchen, there are chips, especially cooking chips, frying chips. You realize, ladies and gentlemen, this restaurant, of course, we expect that they are burning these chips day and night, 365 days a year. We expect to be getting some chips, which is a little bit, I can't call it dirty, but I mean, it can never be as white as we get them. When you go to a restaurant and you realize that these chips is so clean, sparkling clean, know that there is a mercury component that has been used to, in this case, absorb all those water, black, things like that. So what is the end result of that? Cancer, right? So where is that problem coming from? Unemployment. So if there is anything bad that we can do as a nation, is to start sending away investors, right? Telling them that you guys now, you are here, you are even benefiting. Like right now, I read something here that they want to really start using. But for example, if you are this great company like SAP, you have employed Aura, for example, you're paying Aura $1 million shillings. In your country there, Aura would have earned like 3 million. That now this difference of 2 million is a benefit, which you need to share with Kenya government. What is that? You're making business to be expensive. For who? For these investors, foreign investors, right? Foreign investors are normally brought in, let them come in, and then now you can get a way of minting money from now this. When these guys are employed, trust you me, you can increase tax for them and everybody will be happy. Dubai, over 30 years ago, Dubai was a desert, but they knew this concept of a free port. They knew, I wish I was in government today. I would make sure that we introduce like Mombasa to be a port of almost zero water taxes. Just Mombasa alone. But if you bring your vehicle in Mombasa and you are swinging around with it, so long as you're in Mombasa, you are not going to pay any tax on it. Those goods that you bring on board, so long as you're in Mombasa, no tax at all. We will grow a city. I mean, and this city in Mombasa now, the moment these goods are manufactured all over, we shall be able to boost our exports, because now we become excellent in whatever that we do, right? So the talk of balance of payments, ladies and gentlemen, don't forget that balance of payments is exports minus imports. And we are saying that a good government should be able to get all the ways of ensuring that we import less. And we can do it the Rwanda way. You see, like now Rwanda came and said, there is no wearing of second-hand clothes. In Jerome, are you around with us here? Jerome, are you here? Jerome from Rwanda. Are you here? Jerome here? Yes. Do you normally have mitumba in Rwanda? Do you have mitumba in Rwanda? Do we have a mitumba in Rwanda? Do we have mitumba in Rwanda? Jerome, I'm waiting. Mitumba, second-hand clothes. You can even see this guy doesn't know. Second-hand, these clothes which are normally imported, and then they used to be there in Rwanda some time back. They come with high taxes. You will not even find them. But now you see in Kenya here, These guys even import second-hand mitumba clothes. Even the inner clothes, you can imagine. You can imagine. You can imagine. So what is the effect of that? We are killing all our textiles. For example, now the Mountex in Nanyuki is sleeping. Right? And after Mountex went to sleeping, the giant called Nanyuki, right now in terms of unemployment, when we start importing too much, like sugar, what is happening to Mumias? You know, people are not facing these things head on. Mumias is not even being killed by poor leadership, poor management in at Mumias. These companies are being killed by what here? By imported sugar, imported products, right? We shall be able to talk more about this. How I wish I could get even a chance of writing a very good concept paper for this government for free, and I'm hoping that it shall be adopted. People should not fear that if you lose taxes in the short term, you will be able to go down as a country. No. There are big ways. There are countries that have been able to get out of ashes simply because of what here. You know, the major thing should be what? The major thing should be, let's employ these. Let me tell you, in the next 5 years, let me tell you, please listen to me. In the next 5 years, I can see a very, I'm seeing a big revolution coming. And this revolution itakuwa makabila mbili. Itakuwa ya matajiri na maskini. Like I remember there is a place I went to, I'll not mention. Jamaa rafiki yangu wa kitambo, nilifunza yeye kitambo zaidi. Niambia mwalimu siku hizo umemea tumbo. Nyinyi ndio mnakula mali ya serikali. Na ukiona the guy is so seriously looking at me. Right? So it shall become in this, we will reach a level where we shall start eating each other. We must address this thing of what here? Employment. We must address it, not today, yesterday. It is that urgent. 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 Great. So balance of payments, shall be looking at balance of payments. Yeah, you can see like now Gloria is bringing up something very nice, like this cost of electricity. We need to find a way. How do we drive these factors of production down? That's why we are putting leaders in government. This is not the time to increase electricity, especially for industries. It's not the time to increase water for industries. You can even increase, you know, you can do, ladies and gentlemen, some kind of discrimination. You can do even for these homesteads, you say you want to discourage because of environment, etc., electricity, people should buy solars, right? But for the industries, ensure that the cost of production is what you're down so they can take care of what our children in the near future. Otherwise, this country, these cities will reach a time where utakuwa unaonekana msichana umevaa high heeled shoes, unaambiwa unaiba pesa serikali, sasa angalia mwizi huyu. Unachapwa. Kama saizi ukienda gari yako hivi, uguze mtu wa pikipiki kidogo bahati mbaya. That's when you will know that people are angry outside here. Right? There is a problem. Thank you so much. Great. So we shall overcome. So this is a very interesting topic, and I would really want you guys to get involved and challenge us. So we are being told here that there are several international financial institutions that play a crucial role in the global financial system, including the International Monetary Fund, the World Bank, and the Bank for International Settlements, BIS. These institutions work to promote international economic cooperation, facilitate cross-border transactions, and provide financial assistance to countries in need. In recent years, international finance has become increasingly complex and interconnected, driven by advances in technology, globalization, and the increasing integration of financial markets. As a result, managing international financial risks has become an important issue for financial professionals and policymakers, and requires a thorough understanding of the global financial system and the economic and political forces that shape it. What are the motives for investing in foreign markets? Why would I want, as an RCM online college, to invest in other countries? Number one, to spread my risk, to diversify. Some of these countries, like African countries, you can wake up one day, you get people in war. And if you had put all your eggs in one basket, you get into problems. Look at a big country like Congo. Congo is a huge country. But because of internal conflict, I mean, if you had invested put all your eggs in Congo, then you lose. Diversification, yes. Higher returns. There are countries, if you happen to go there, ladies and gentlemen, like now Safaricom. If Safaricom's move of going to Ethiopia, for example, succeeds, this is a high return economy. Why? Because of the high population. Ladies and gentlemen, today I would want to invest in other countries because of, I would want to earn in terms of different currencies. Like the other day I introduced 𝒐𝒇𝒆𝒓 and insisted that I have to be paid in dollars. Students refused. And I also said, now I will not do it this time around because I really wanted to get the dollar. So exposure to different currencies, access to new markets. Investing in foreign markets can provide access to new markets and growing markets, such as emerging economies, which can offer significant growth potential for favorable regulations, ladies and gentlemen, especially for these tax havens. If, for example, as an RCM, like now, we are always talking about having a huge open university. So I did some research. And I realized that if, for example, I would want to become a university very fast, I should go and open a small branch in Burundi, right? Burundi, in this case here, opening a university, they're changing a call to university is very fast. And once I get now university chapter, I can come and open what here? I can come and open a branch here in Kenya. And of course, later on, I transfer everything in Kenya as their major head office. So favorable regulations, some countries may have more favorable regulations for foreign investment, which can make it easier for investors to access and invest like that. What are the challenges experienced by multinational corporations? Political risk. Like, we had so many companies from Kenya which were doing very well in Southern Sudan. All of a sudden, turmoil there. Although we are still having, or rather we are seeing it getting back to normalcy, although in a slow way, but there is political risk. There are cultural differences. If, for example, like now Jerome is really trying. When I was in Rwanda some time back, I realized, ladies and gentlemen, Kenyans are very hardworking. Even Uganda here, even Uganda. After Kenya, Uganda, for example, just these young girls and boys who are serving you in a hotel. Kenyans are hardworking. They'll wake up at, in this case here, 7, even 6 a.m. You will get people in town. You can go and brush your shoes there. In Rwanda, it's quite hard, Zero. So if you open a branch in Rwanda, don't expect that you start pushing those guys like every day come to the office at 7. Those guys will leave that work for you. So multinational companies, like even where I work, ladies and gentlemen, like where I work, there is a huge problem, right? Now, we went home for COVID and they were told to work from home, all right? Now the investors want everybody to go back to office. But there are countries where people now have refused to go back to office 100%, including our mother country like Sweden, right? So then we are raising an issue. If at home, you are home, people don't work in the office 100%, why should you work in the office here 100%? So cultural differences really matters quite a lot. But remember again, cultural differences. Like when you go to some countries like even Congo, right? These are guys who believe that their lunch must start at 12. Imagine somebody who has come in at 9 a.m., wants to go out for lunch at 12, and their lunch break is 2 hours, 2 p.m. And during this lunch break, they must swallow something which is a little bit cold than water. And then they come back later, and then you start. So cultural differences. I happen to be working in a company that is present in about 140 countries. Ladies and gentlemen, cultural differences, they play a big thing. Like you see, for a Swedish person, what I've always discovered is that, for example, if we have like somebody, our boss, for example, called Jonas here. So we have Joshua here. So Joshua goes and tells Jonas something about David. So what he'll do is that Jonas would assume that he has not heard what you mentioned, that he'll just fake it. He has not heard what you told him about, and he'll encourage you. So then later on, what he'll tell you, Joshua, no problem. Please, whatever you're telling me about David, put it on email. So if you are not aware of their culture, once you send this email in 5 minutes, he has copied David there. They are that open, they're that transparent, and then you start sweating. Right? And that is why when you go to Swedish companies, there is no gossip. That is their culture. Is their culture. There is no gossip. And then they are very open. If, for example, you have not done your work very well, they'll tell you right there. But you see, African countries, we guys are full of what here? I mean, sweeping things under the carpet. And that's why we don't make very good managers at the end of the day. So cultural differences, they really affect these multinational companies. Now, ladies and gentlemen, we have here exchange rate fluctuations. When you are in different countries, you'll be handling, ladies and gentlemen, various currencies. Like now, if you look at Kenya Airways. Kenya Airways is a multinational. They happen to have done a mistake that they were told by KLM not to do in Nigeria. They went and started, in this case here, a price war with some airline carriers there. And they started moving Nigerians from one country to another, one state to another, and they started charging them in Naira. So they accumulated Naira. But now Nigeria came up with a policy of saying you cannot move with our Nairas outside. If you want to move outside, you do what you surrender our Nairas, buy dollars. But what do you know about Nigeria with dollars? There are no dollars in Nigeria. Just like in Kenya here, dollars are now going away. We don't have dollars, right? We don't have dollars, right? There is a problem because of what is this concept of foreign direct investment, the foreign direct investment. I can see so many. Please, we are not talking about politics here. Don't get me wrong. I'm not talking about politics. Bottom up was a scam. No, I'm not talking about politics at all. Let's not go there. If this bottom up thing is implemented very well, it's only that you'll still get these top people again having interests. But if bottom up, the way we understood it, if it was implemented very well, then people would have done what here would have benefited. Because you see, bottom up is about what? The top people. You guys pay your taxes. And then once we pay our taxes very well, then these mainstream things like hospitals are working, etc. But now the problem is the people who are telling you to pay taxes are the people who had cases from KRA now. Cases zao zimeangushwa. So the concept itself is good, but let us not talk about politics. This is our country. We must love our country. And most importantly, I'm not giving you these things so that you can have this political. No. I know you guys already could be managers in this country, or you may end up being governors. You may end up being, in this case, the governor of Central Bank of Kenya. I would want you to get this thing practically. No politics at all. No politics at all. No politics at all. No politics at all. I don't want us to start throwing stones at each other. No, we are brothers and sisters, all of us under one. No, we have two presidents, so there's no problem. There's no problem. You should not fight at all. You're not fighting at all. Don't fight at all. Don't fight at all. Great. So exchange rate fluctuations. We have competition. Like now, Safaricom has just landed in Ethiopia. As much as you're wishing for the best, there could be a problem because of rivalry. And you see, Ethiopians love their own, right? And again, you may get, for example, a president who comes and tells them, you guys buy Ethiopia. Don't travel with this thing. Don't use, for example, Safaricom telecommunications. So competition is there. For multinationals, competition is there. Logistics and transportation. MNCs, multinational companies must also manage the logistics and transportation of goods and services between countries, which can be difficult and expensive, particularly if they operate in countries with poorly developed transportation. Ladies and gentlemen, we have the international financial systems. Players in the international financial system, such as the International Monetary Fund, World Trade Organization, European Union, and the World Bank. And I would straight away go for the international financial system is made up of a number of key players, including IMF. IMF is an international organization that works to promote international monetary cooperation and facilitate the balanced growth of international trade. It provides financial assistance to countries facing economic difficulties and works to promote economic stability and sustainable economic growth. Ladies and gentlemen, remember, the main aim of International Monetary Fund is stabilization of exchange rates. Like right now, they are saying, really, you guys in Kenya, you must do quite a lot to ensure that you are able to increase your dollar reserves, right? Then we have the World Trade Organization, WTO. The World Trade Organization is an international organization that regulates and promotes international trade. They would want you to export and export and export. It provides a framework for negotiating and enforcing international trade agreements and works to ensure that trade flows smoothly and predictably. Then we have the European Union. The EU is a political and economic union of 27 European countries that aims to promote economic integration and cooperation among its member states. The EU operates a single market, which allows goods, capital, services, and people to move freely within the bloc. World Bank is a group of 5 international organizations that provides loans and assistance to developing countries for purposes of promoting economic growth and reducing poverty. The World Bank also provides advice and technical assistance to support the development of infrastructure and human capital in developing countries. Ladies and gentlemen, I would want us to look at each one of these at a time, and I would want us to start with the World Bank and the international finance. The World Bank is a group of 5 international organizations that provides loans, advice, and technical assistance to developing countries for purposes of promoting economic growth and reducing poverty. The World Bank was established in 1944 and has its headquarters in Washington, D.C. The World Bank provides loans to governments and private sector organizations in developing countries for a variety of purposes, including infrastructure development, health and education initiatives, and support for SME. In addition to its lending activities, the World Bank also provides advice and technical assistance to support the development of infrastructure and the human capital in developing countries. Very important, ladies and gentlemen. We are told the World Bank operates through two main institutions: the International Bank for Reconstruction and Development and the International Development Association, IDA. The International Bank for Reconstruction and Development provides loan to middle income and credit-worthy low-income countries. You have the ability to pay the loan back. Then it is the IBRD of World Bank that will give you this loan. While the IDA now provides grants. Grants are given to you without you not pay back. IDA provides grants and low-interest loans to the poorest now countries. The poorest countries. I think for me that is enough. You guys now will be able to read that at your own time. International trade flows and foreign direct investments, FDI. This was tested just the other day. International trade flows and foreign direct investment are 2 important components of the global economy. International trade flows refers to the exchange of goods and services between countries. This can involve the export of goods and services from one country to another, or the import of goods and services into a country. International trade can take many forms, including the trade of goods, services, and intellectual property. Foreign direct investments, FDI, refers to investments made by companies or individuals in foreign countries, typically with the goal of establishing or acquiring a lasting interest in an enterprise operating in another country. We call it foreign direct investment when you buy ordinary shares of companies, for example, in Kenya, if you're an outsider. So lasting investment, you become, in this case here, an owner. This can take the form of creating new operations in a foreign country, or acquiring existing companies, or investing in foreign businesses. Both international trade flows and the FDI play an important role in promoting economic growth and development. International trade allows countries to specialize in the production of goods and services in which they have a comparative advantage, and to exchange these goods and services with other countries. This leads to increased efficiency and lower costs, which can benefit consumers and businesses. FDI, on the other hand, can bring in new investment. There's a time they asked us the advantages of FDI. FDI can bring in new investment, technology, because now it's wanakuja hapa, and expertise to a foreign country, which can help to spur economic growth and development. FDI can also create jobs and provide new market opportunities for local businesses. Because once we have a big enterprise which is being created by these foreign investors, ladies and gentlemen, come for example like Sunda, which is in Kajiado, which in this case here does these ceramic tiles and whatever, Sunda. I mean, the local community over there is really enjoying because they're able to get a market for their milk, etc. Financing of international trade. If, for example, today, Gloria, you are to get some business to supply goods to the US, how will you be able to finance this? And maybe you don't have the dollars, you don't have the money. Then you can go to your bank, for example, and get what we call a letter of credit. A letter of credit is a type of financial instrument that provides a guarantee from a bank to a seller that payment will be made upon delivery. So the bank is telling you, hey, has this investor agreed with you about you selling to him this car? Yes. Has he seen the car? Is he satisfied? Yes. So then we are doing this guarantee that the moment you sell this vehicle and have it in Kenya received by this particular buyer, we shall be able to release money for, he has the money. It's called letter of credit. Very important. This type of financing is commonly used in international trade to reduce the risk of non-payment. You know, bank cannot disown once they have made that guarantee automatically. Then we have export credit like the Exim Bank, export imports over China. Export credit refers to loans or financial guarantees provided by government or export credit agencies to support exports. These types of financing are designed to help companies overcome the challenges with international trade. Like China is so big at it. You go to China government, tell China government that you know what, I'm a Chinese first. And I've gotten a big road in Kenya called the Express Highway that I'm supposed to do, which will cost 100 billion, for example. Then they'll write a guarantee letter, right? You'll be able to get, in this case here, a guarantee from Chinese government for you to go to Exim Bank and get money. So export credits, even in Kenya here, there is this thing, but it's normally operated under top secret. There are companies that get what we call financial guarantees. So they are there. Trade financing is another way you can make use of. Trade financing refers to the various financial products and services provided by banks and other financial institutions to support international trade. This can include loans, guarantees, and other types of credit facilities designed to help companies finance their, ladies and gentlemen, trade financing. This is your normal loan. Where you go to a bank, tell a bank, for example, I've got this LPU, and they give you money. Trade financing, they're supporting trade. Then you have got factoring. Factoring, ladies and gentlemen, you must have heard of factoring in financial management of intermediate level, where you factor, for example, your receivables. Where you go and tell a bank, you know what, I've got these students who owe me, and these guys will be paying me by the 6th of next month. So I would want, in this case, to sell to you these people. And of course, when they start paying me the installment, I'll ask them to pay to your account. You'll be able to get your money there. So factoring is a type of financing in which a company sells its accounts receivable to a third-party financing company. This type of financing can be used to help companies manage their cash flow, to reduce their exposure. So here, I've gotten a job. I've gotten a local purchase order from somebody who is in America. And I happen to be having a student's receivable book of, say, 20 million, where students are going to pay me by the 6th. So I'll go to this person and call him a factor. It could be a Kenyan here. Tell this guy, you know what, I don't have money and I need this money tomorrow. I want to supply someone in America, give me this money. So he'll tell you, how much receivables do you have? 20 million. Of course, he can't advance you to 20 million because of what? Because of bad debts which may accrue. So he'll look at your past records, and then, of course, he'll be able to come up to some number. So he'll perhaps give you 50. So when you talk of factoring, you're factoring your debtors, you're mortgaging your debtors, you get a loan. Forfeiting, they're quite similar. Forfeiting is a type of financing in which a company sells its accounts receivable to a third-party financing company at a discount. So you forfeit something. This type of financing is often used to finance exports, and it can help companies to manage their exposure to payment. So it's kept forfeiting, exact explanation with this factoring, but here you're going to forfeit some discount. You can say 20% is yours. Open account, just like Salam. Open account is a type of financing in which payment is made after goods have been delivered and accepted by the buyer. This type of financing is often used for established trade relationships. Otherwise, utapeleka vitu zako, for example, Somalia ama wherever, usikie buyer amepotea. It must be for established trade relationships. Great, great. Now, we have various questions here that I would want us to look at. For example, August 2022, question number 5. Question number 5, November 2019, question number 3. Question number 3, we have here, there are only 2. There must be many. Must be many from the relationship. Add later, right? Okay, thank you very much. So November 2019, question 3. No, August 2022, question number 5B. Discuss 4 advantages of foreign direct investment, FDI. Foreign direct investment refers to investments made by companies or individuals in foreign countries, typically with the goal of establishing or acquiring a lasting interest in an enterprise operating in another country. FDI has a number of advantages, including increased investment in a country. You as a president can go and take pride and say, you know what? Last year, the foreign direct investments were 10 trillion. Now they've gone up to 20 trillion in my first year of governance. FDI can bring in new investment, capital, and technology to a foreign country, which can help to spur economic growth and development. This increased investment can lead to creation of new businesses and jobs, as well as improve infrastructure and transfer of technology and management skills. FDI can also bring new technology and management skills to a foreign country. This can help to improve their competitiveness and efficiency of local businesses and can lead to creation of new and better products and services, access to new markets. FDI can also provide companies with access to new markets and customers, both in the foreign country and around the world. This can help companies to diversify their operations and reduce their dependence on any one market. Improved economic, we are becoming one, integration is put together. FDI can also help to improve economic integration between countries by encouraging the flow of goods, services, and investments across borders. This increased economic integration can lead to increased efficiency and productivity, as well as greater opportunities for economic growth and development. Ladies and gentlemen, in your own language, if somebody was to ask you this semester again, what are the key advantages of FDI in your own language, 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 what are the advantages of FDI? Where would you want the Mzungu Mzungu? Where would you want the Mzungu Mzungu? You know, even when a Mzungu gives a young girl, like the one who gave this girl 1.2 million Kenya shillings, and the girl's money was frozen. The girl's money was frozen. And yet these are foreign direct investment. I think somebody should ask that question. You are harassing investors. You are harassing the Mbabas, isn't it? No, that's a joke. You guys give me the points I asked here. Give me the points I asked here. Give me the points I asked here. Great. Access to new technology. Great question there. Employment, new expertise. Thank you very much. And you guys are bringing these points very well in 2 words. But of course, in an exam situation, I would want you to add some meat, isn't it? I know you'll be able to add some meat. I know. Facilitates job creation. I love that. Thanks very much, Stephen. Yes. Yeah. Because at the end of the day, ladies and gentlemen, foreign direct investments will also lead to what here growth of countries because of what here increased taxation. At the end of the day, these guys will pay taxes here at home. At home. All right. All right. Exposure to different currencies. I love this. This is quite a novel idea, good idea. But these guys are bringing in the dollars, right? So this will lead also to what we call stability of exchange rates. Great. I seem to be knowing these things. How comes you guys, you can't talk to the government to give me a job? How comes you guys can't talk to your government to give me a job? Like now you can imagine Jaguar. Jaguar now was given to become the chairman of Consolidated Bank of Kenya. And I'm so sure Jaguar does not know even a single financial ratio. Somebody will argue that, as a chairman, you don't have, no. They are sensitive sectors. They're sensitive sectors. I'm so sure there is somebody there who will be able to pick this up, and then they give me something. These are who can't even interpret like financial statements. You would not even come here and give this job to one of my students, honestly. Because now this guy will go there, then we'll start singing Kigeugeu, kwa board, sort of board disharmony, international disaster, but we shall overcome, we shall overcome, we shall overcome, we shall overcome. No. As a director, of course, you don't have to really know these things, but at the end of the day, you need to have some know-how, some knowledge has to be there, honestly. I'm a musician, leading a board of a bank, not unless you're telling me it's because of some money laundering issues or something. Actually, right now, Consolidated Bank is a bank to do what here? To start watching, with question marks, because that is quite not proper. That's not proper. Chairman, especially chairman. Chairman. These are positions which should be given to people like Martin Oduor. Blah, blah, blah. But we shall overcome. As we said, no politics. No politics. We shall overcome. 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 Great. Thank you very much. Thank you very much. Now we come back here. They wanted us to summarize 5 functions of the International Monetary Fund. International Monetary Fund, the IMF, there are things I will never ever forget. Lending, technical assistance and the training, research and analysis, facilitation of international monetary cooperation, right? We have surveillance, like right now, they're really harassing their Kenyans, surveillance. The IMF monitors the economic and the financial policies of its members countries, both individually and collectively, to ensure the stability of the international monetary system. Because they also have a role in terms of stabilizing exchange rates. Lending, IMF provides loans to its member countries facing balance of payment difficulties to help them overcome temporary economic difficulties. Technical assistance and training. The IMF provides technical assistance and training to its member countries to help them improve the economic and financial policies and institutions. Research and analysis. IMF conducts a lot of research. Like right now, I don't know, for whatever reason, I think these guys, they really want to call, I don't know whether it's conmanship or something. You can imagine they are telling Kenya that we are overvaluing the shilling. We are overvaluing the shilling. That they would want the shilling, in this case, the dollar, to be about 150. So I don't know what will happen once we start. I mean, we are a net importer. If you have a net importer country devaluing their currency like this is a killer. Everything, this will spur inflation. And that is why I like some student who has asked up there, is it true that it is World Bank and the IMF that is pushing our great country here through, of course, our president here to increase tax? Of course, yes. Yes. But you see, even those things have not worked in their countries. Their countries are in problems, like the UK. I mean, right now, UK. I read the other day that even lecturers in the UK went on strike because of what their low wages, right? So I don't think really there's anything that we can really borrow from this guy. The most important thing is that let's create our economy here locally. Of course, let's pay taxes. Taxes we have to pay, right? But let's have our homegrown solutions here. And of course, these solutions should be going towards ensuring that we give employment to our young brothers and sisters. People like the other day I was in my village. I'm telling you, people are sinking into poverty day and night. You look at some of your cousins who you left many, many years ago. I mean, you wonder what is not happening. We even thought that these county governments are going to do great things there, but again, those again became pockets of people, right? So nothing really much to smile about this country. Greediness. But we shall overcome. We shall overcome because now we have young people, us, my generation, may not be able to save this country. But I believe there is some group of people like yourselves who will come and save this country in the future, because there is a big problem. There is a big problem. Great. So Gloria is saying here that Jaguar was a legislator. Legislator Gloria, did you hear him moving any motion in the parliament? Anyway, let's not get personal. But supports balance of payments, I like that. Great. Decrease. Yes, already I've answered that. These guys are really the ones who are pushing us, pushing even these GMOs to us. We don't know why they would want to kill these poor Africans who don't even have cancer hospitals, etc. But we shall overcome. We're not yet there. Perhaps you can take that, like now, maize coming to Kenya, like now, maize coming to, you can take that as part of what here, international flow of goods, which is quite a big thing, great thing, according to WTO. Great. You guys are really following this, which is very good. There is not a single semester I've had my students following the theories. Like this semester, students are doing very well. They're following the theories. And without knowing a lot of theory, then automatically you will get into what here, into problems. Great. So, and that is it, ladies and gentlemen.